Hi, this is Angie, and welcome to this step-by-step guide on how to identify entries in trading. Let's begin by understanding the indicators on the charts, as they're the foundation of our strategy. At the bottom, you'll find the RSI, or Relative Strength Index, which helps us identify potential pullback levels. Specifically, the 60 and 70 levels indicate overbought conditions where we start looking for sell opportunities, while the 40 and 30 levels indicate oversold conditions where we look for buy opportunities. This indicator is critical in helping us time our entries more accurately. Moving on to yesterday's high and yesterday's low, these are key levels acting as dynamic support and resistance. Be cautious, selling above yesterday's high or buying below yesterday's low carries additional risk, so always analyze these areas with care. Next, we have the magenta line, which represents the prior mid-level, PML, a midpoint of the previous day's range. This is an essential trend indicator. When the price is above this line, we lean towards buy entries, and when it's below, we look for sell entries. Then we have the red and blue lines, which mark prior 4-hour highs and lows. These levels give additional context for support and resistance. Typically, it's safer to sell below a prior 4-hour high and buy above a prior 4-hour low, but like any rule, exceptions exist depending on the overall market structure. The blue zone is another critical tool representing the 4-hour range formed by the first candle of the day. This zone is a guide for entries. Buying above, selling below, or even entering within the zone can all be valid strategies depending on the market trend and additional confirmations. Finally, let's talk about the gray pullback zones, which are unique to each time frame and act as dynamic support and resistance. These zones are key for understanding trends, whether on H1, H4, or M15, and are particularly useful for confirming entries. It's important to note that the scalping dashboard contains most of this information, such as RSI levels, prior mid-level direction, and other key details. However, the gray zones are not included on the dashboard, so analyzing these directly on the chart is crucial. The dashboard speeds up your process, but understanding the function of each indicator ensures you can make informed and confident trading decisions. Now that you have a clear understanding of the chart indicators, let's move on to applying this knowledge to find entry opportunities. To look for a sell entry, start by confirming the price is below the magenta line or prior mid-level PML, which indicates a bearish trend. On the dashboard, this is shown in the PML column as below. Next, check the RSI for levels between 60 and 70, signaling a pullback that may offer a sell opportunity. You can wait for RSI alerts using the dashboard's M5 RSI column or monitor the chart directly. Verify that the price is within or below the gray pullback zone on M5, M15, or H1, which acts as dynamic resistance. Ideally, the price should also be below the prior 4-hour high for additional confirmation of bearish momentum. Use the blue zone formed by the first 4-hour candle as guidance. Sell near its upper boundary, below the zone, or even within it depending on other confirmations. Wait for a bearish reversal order block alert using the trend dashboard. You can enter on a reversal block or trend block, depending on the market setup. It's important to understand that this example shows one possible sell pattern, but there can be variations depending on market conditions on any given day. Once you grasp the overall concept of an entry, you'll need to use your own discretion, as some entries may not look as clear as others. For managing the trade, if you choose to use a stop loss, you can place it just above the prior 4-hour high. For take profit, consider targeting the next low or monitoring RSI levels, specifically when the RSI reaches somewhere between 40 and 30, which signals potential oversold conditions. Always stay flexible and adapt your approach based on market behavior. To look for a buy entry, start by confirming the price is above the magenta line or prior mid-level PML, which indicates a bullish trend. On the dashboard, this is shown in the PML column indicating above. Next, check the RSI for levels between 40 and 30, signaling a pullback that may offer a buy opportunity. Wait for the RSI alerts using the dashboard's M5 RSI column, or monitor the chart directly. Verify that the price is within or above the gray pullback zone on M5, M15, or H1, which acts as dynamic support. Ideally, the price should also be above the prior 4-hour low for additional confirmation of bullish momentum. Use the blue zone, formed by the first 4-hour candle, as guidance. Buy near its lower boundary, above the zone, or even within it depending on other confirmations. Wait for a bullish reversal, order block alert using the trend dashboard. You can enter on a reversal block or trend block depending on the setup. It's important to understand that this is just one example of a buy pattern, as there could be different patterns depending on market conditions that day. Once you understand the overall idea of a buy entry, you will need to use your own discretion, as entries may not always appear as clear on some days as on others. For managing the trade, if you prefer to use a stop loss, you can set it just below the prior 4-hour low. For take profit, you can aim for the next higher monitor RSI levels, specifically when the RSI reaches somewhere between 60 and 70, indicating the potential for overbought conditions. Always adapt your approach to the market's behavior while keeping the strategy's key principle in mind. Now that you understand the structure of what a buy or sell entry should look like, using the indicators on the chart, we can move on to the scalping dashboard. The dashboard allows you to quickly scan multiple pairs to see which ones look promising for further analysis. It includes most of the information we've just discussed, like yesterday's high and low, the prior 4-hour high and low, the 4-hour zone, the prior mid-level, PML, RSI levels, the 4-hour candle, and the daily candle. However, keep in mind that the gray pullback zones are not shown on the dashboard, so you'll still need to analyze the charts for those. For example, if the dashboard shows a pair is above yesterday's high in that column, it's likely in a strong uptrend. From there, I can check if the pair is also above the 4-hour zone and the PML, which further confirms a bullish trend. At this point, I'd be looking for a possible buy pullback entry. All that's left is to wait for the RSI to approach the 40 level and see if the conditions align for a buy entry. If you're just starting out, focus on these key columns: 4H zone, PML, and M5 RSI. That's all you need to begin spotting opportunities. Remember, the dashboard is a tool to give you a quick idea of the market, but it's not the complete picture. You'll always need to analyze the charts to make an informed decision. Once you're comfortable with this trend strategy, you can start exploring the reversal strategy and possibly add more columns to the dashboard to enhance your analysis. However, remember that more is not always better, especially if you're a beginner. I've included additional columns for flexibility in case we want to use a different strategy later. The key thing to understand is that while the strategies may vary, the chart setup remains the same. It's just a matter of learning to interpret the market in different ways using the same tools. The scalping dashboard isn't just for analysis, it's also interactive. You can place buy and sell orders directly from the dashboard, adjust the lot size, and set your take profit and stop loss levels in the settings. This makes the process faster and more efficient, especially once you're familiar with the strategy. Whether you're using the trend or reversal approach, the dashboard is a powerful tool to streamline your trading workflow while keeping your focus on the charts for confirmation. Trading is all about consistency, patience, and understanding the tools you're using. The strategies and dashboard I've shown you today are designed to simplify your analysis and help you make informed decisions. Remember, no strategy is perfect and the market will always have its variations. The key is to stay disciplined, stick to your rules, and adapt as you gain more experience. Keep practicing and don't be afraid to make mistakes. They're a part of the learning process. Thank you for watching, and I hope this video has given you the clarity and confidence to take your trading to the next level. If you have any questions or need further guidance, feel free to reach out. Happy trading!